Yo, what's up? It's your boy CJ. No face cam this video, but this video today we are going to be talking about a full in-depth breakdown of my model. I call it the SEIG model. And yeah, that's all what this video is going to be talking about today. And hopefully you guys, end up using the model or, find it easy to use. So this is what this video is all about. And I'm gonna write down the steps here. So first step, so you're gonna need 3 indicators. All right, we're gonna start out with that. All right, 3 indicators. You're gonna need EMA 200 for your bias. You're gonna need the EMA 13 entry trigger. Can't spell. You're just gonna need a fair value gap indicator. Those 3 indicators right there alone should do the job. And now we're going to get into the actual model, and I'm going to add those indicators right here. We are on this thing called FX replay. Alright, so moving, it's right here for the EMA. Moving average exponential, you're going to need that twice. Bam, and you're going to get your IFVG indicators. And it's the same thing on TradingView, so if you getting this on TradingView, same thing. So 13. I just like making mine different colors. Bam. Then here we're gonna keep that blue. 200. And yeah, there we go. EMA 200 directional bias. EMA 13 entry trigger. Fair value gap is also an entry trigger. All right, so now that we have our 3 things, we're gonna get right into it. So first step, right? First step, higher time frame. We go to a 4-hour time frame. So 4-hour time frame. Step 1. Find our bias. Step 2, scale down to the 5 or the 3 minute time frame. Yo, is time frame one word? That might be that might be chill. I don't think it's one word, but fuck it, who cares? 5 to 3 minute time frame to find out your entry. You wait for a V to form in the market. Sure, EMA 13 body closure and an FVG all in one. So I could probably go in one candle. I mean all in one thing. Or IFVG all in one candle. And then you just enter. That's literally it right here. This is literally all I use to trade on a daily basis when I am day trading or intraday trading, whatever you want to call it. But yeah, this right here will literally get you everything you need. So you want to take a picture of this or whatever, by all means. But yep, this is literally it. 4-hour time frame, find your bias. 5 to 3 minute time frame entry. You wait for a V to form like structure. EMA 13 body closure and FVG, IFVG all in one candle, and then you enter. Then you slap a 101. I forgot to say that. Slap a 101. Easy structure. You're gonna hit. But yeah, move on with your day. So in this video, we're just gonna back test that a little bit. We're gonna back test 5 trades. This is random. We can go to random days. Let's just go, I don't know, let's keep clicking. Bam, what day is this? January 7th. All right, so we're gonna put this down here. I'm gonna make that smaller, put that down here. and we're gonna get straight into it. Like I said, we're gonna back test 5 trades and we're gonna see how it goes. Bam. So we start out on the 4-hour time frame, like I was telling you earlier. Bam. We look at where price is at. This EMA 200 is going to tell us all about our direction and our bias, right? So anything over the EMA 200 is bullish. Anything under this EMA 200 is bearish. So right now price is over the EMA 200, so I am bullish on the day, and we find this out on the 4-hour time frame. If it's choppy and you don't know, like let's just say around here, you hop on the chart sense around here, just go to a higher time frame and you're going to keep finding it out. Right, and so now we're going to jump down to the 5-minute. Market opens at 9:30. We're going to keep clicking until we get the EMA 13 body closure, FVG or IFVG all in one candle with the V-like structure formed. So let's see when we get that. Right here, we're just freaking tanking. Keep clicking until we get it. Keep clicking. Keep clicking. Bam. All right. Here we have it right here on the 5-minute. V-like structure, as we can tell here. Bam. We have the EMA going through the body. And you also can see right here on the 3-minute, it's even better entry. That's why I say you got to switch between the 2 time frames when you're trading it. But you want to slap, let's just do the 2 units here. Slap a 101 on here. Oh, also, FVG is going to be right here, right? Fat FVG right there. Slap a 101 on there, and let's let it cook. I like to watch it, so we're going to see. And bam, TP hit. So we are 1 for 1 so far. Like I said, I like to go for 1-on-1s. High win rate, easy. Say what you want to say about them, but it works for me, and I'm just telling y'all it works for me, and this is my video. If you don't like it, oh well. So, easy. Easy peasy lemon squeezy. Slap a 1-on-1. EMA closure, FEG, all in one candle, V-like structure. Can't get no better than this. Now let's go to the next day. Start out, rinse and repeat. 4-hour time frame. What do we see? This time we are below the EMA 200, so we are bearish for the day. Oh, also to go back to the prior example, we were bullish on the day. What did we take? Did we take long? Yeah, we took longs. So, as you see. But when I say find your bias, don't be married to your bias, okay? Don't be married to it. You can cheat on your bias in this situation. So we are below, so I'm bearish. 5-minute time frame. Let's see. Let's wait and see till we see something. Maybe something here. Yep. This is also a perfect example right here. And yes, we already saw it, but my finger's clicking too fast. But you get the point, right? And this is also a classic AMD model. We have accumulation here, manipulation to a higher time frame gap, and we're going to distribute here. It's all the same thing. All this trading shit is all the same thing. But once again, we're going to be taking this on the 3-minute, and our bias is bearish. And so this all aligns, right? We have the V formed here. Perfect V. And we are going to take this trade because it gets no easier than this. 1-to-1, whatever you're risking, what you're looking to get back. And let's let it cook. Bam, TP hit. And we are out of there. Easy peasy, right? It gets no easier than this, bro. No easier than this. SEIG Model. But yeah, that's 2 for 2. So we're gonna do 3 more days, 3 more trades, and yep, rinse and repeat. 4-hour time frame. It'd probably be minimal editing on this video too. I want to keep it as raw as possible, so you guys like know what it is. You feel me? But yeah. All right, 4-hour time frame. We are still bearish, and like I said last time we were bearish, we end up taking shorts. So you see how the bias, and I just use bias more as like a probability thing. Like if it's already bearish, you know, I know when I'm clicking a sell, like higher probability for it to hit. But yeah, that's kind of how I use bias. I'm just not like, oh, I'm only taking that trade. No, I will like take other trades too. But here, all right, 5-minute time frame. We already know our bias is bearish. So we're going to keep clicking until we see a trade that meets all of our criteria that we had went over earlier. Okay, we're not really doing anything but dumping here. This might be a no trade. Okay, looks like we got something here. Not really not really something I would take on the 3 right here. No fair value gap. But on the 5, it's looking a little bit better. Let's see if this trade plays out. Here we're going. This is actually a good example where we're going against the trend. But you see this candle has no bottom wick, so I'm kind of iffy on it. I might bring my stops a little bit lower than the bottom of the candle. Is, you know, it's wickless, so you know whenever you have a wickless candle, the candle, like, it's always gonna come back to create the wick for the candle. So let's just see how this plays out. Like I told you, so that time didn't play out. Realistically, I probably wouldn't have taken this trade, only because way you guys couldn't hear me. No, we gotta redo the video. Damn, chat. I'm still dropping this video though. Imperfection. I know you guys probably didn't hear half the stuff I just said, but you guys were able to watch it. But here you go. You can look. We can. I'm gonna just repeat what I just was talking about. 80% win. We took 5 trades, 4 out of 1. Beginning of January, easy peasy, lemon squeezy, 1 losing trade, and we really haven't even took that trade, and you guys are gonna hear me talk about it. It was a wickless. We got in on a wickless candle, right? So we always know we have a wickless candle. It's gonna come back and fill that wick eventually, right? And it just happened to be the next candle. So that's that, and yeah, I appreciate you guys for tuning in. SEIG Trading. This is the SEIG model, and